Hello everyone. Not every crash in the stock market is real. Some are just trap, but some are man-made, engineered to shake out the weak hands. But how do you know all the differences? So when a stock suddenly crashes below its actual value, ask yourself this: who's buying at these levels? According to JC Livermore, one of the greatest stock trader of all time who made money in 1929 crash, one of the biggest wealth that he pulled off from 1929 crash, said that if the fall is unjustified, smart insiders, the ones who actually know the value of a company or the actual worth of a company, start buying quietly. Why? Because they know that the business inside out is quite fundamentally strong, and for them it's like buying rupees 1 worth for every 60 paisa. Now here's the trick: if stock is falling and you see insider buying, increasing promoter stake or bulk deals from from the promoters, from institutions, that's a sign the price will definitely bounce back. But if nobody is buying even when it's cheap, maybe the fall is real. That's the reason you see all these Vodafone or Suzlon Energy, all these companies which have got prices of less than rupees 10 or rupees 50, but you actually have to know the fundamental behind the stock. Why is it trading at such a cheap level? Just because the stock is cheap doesn't mean that it's fundamentally good enough. And yes, if the fall is fast but the recovery is just as quick, chances are it was a raid, a short-term manipulation, and once the manipulation ends, the price jumps, as we saw during the tariff time where almost all of the stocks were down almost 40-50%. That was kind of a manipulation, is what we can say. Of course, manipulation is not the right word to use, but I hope you understand. This is what happens when you get the fundamental companies at such a cheap bargain level, and you just have to wait for your price levels and you can just start buying it. So the next time a stock crashes, just don't look at the prices, look at the buyers, look at the behavior, the investors behavior of the stock market, and smart investors rushing in or staying away. This is you have to look out for, because the truth is prices might lie sometimes but smart money doesn't. Remember, don't be the one who sells just before the rebound. Be the one who waits, you know looks for the trend, watches, and acts when it counts. Thank you.